Hi, everyone. Welcome to TimingResearch.com's Analyze Your Trade, episode number 71 for March 26, 2019. Today, we will be discussing your trade ideas. And so over the last few days, about 30 people submitted up to 5 symbols each. And I've put the list together of the top requests, which you should be seeing on your screen right now while I'm talking. And we're going to get through as many of those as we can today. We're broadcasting live on YouTube at 4:30 p.m. Eastern Time, but you can also listen to the audio-only podcast version of all Timing Research episodes on iTunes, Spotify, Stitcher, Podbean, or wherever else you listen to podcasts. Just search for Timing Research and subscribe. My name is David Kosmeter. I'm the creator of TimingResearch.com, and I have Matt Buckley back to moderate today. So I'm going to go ahead and turn it over to Matt.
Thanks, David. I appreciate it. Thanks for having me back to host Analyze Your Trade. We got a lot of pretty cool symbols, especially towards the mid and towards the later part there. Definitely, and it looks like we got Nike up there twice, which is pretty interesting considering the last 24 to 48 hours. So a lot to cover today. Got two phenomenal 500-pound wingmen with me, Larry Gaines of Power Cycle Trading, and also Andrew Keene from AlphaShark.com. Gentlemen, Larry, why don't you give us a quick executive summary of who you are, your background, and what you do at PowerCycleTrading.com.
Okay, well, thanks for having me here. Hey, Matt. Hey, Andrew and David. Thanks again. Yeah, so at Power Cycle Trading, I've been actively in the markets for over 30 years trading. Started my trading career back in the 80s, trading oil. Ended up running a really large oil trading company for oil trading desk for 10 years out of Bermuda. And then started my own kind of trading educational company back in 2010, I guess. Power Cycle Trading. And so it's based on what we like to do is trade directional price direction, kind of swing trade timing and using options. So kind of using options for controlled risk and leverage. So directional trading, like stocks, ETFs, pretty much anything that's moving, but to apply direction plus options. So come check us out.
Awesome, man. Looking forward to working with you again today. And Andrew, how you doing, my friend? Give us a little bit about yourself, man. Everybody should know who you are, but at least give them a quick brief.
I went on video today, I think my first time ever, so people actually know I actually exist. My name is Andrew Keene. I traded on the trading floor at the Chicago Board Options Exchange for a decade. I was a market maker in GE, Philip Morris, and then at Apple before the iPhone was even out. I started my company 8 years ago. So we run a live trading room where people watch me trade during the day. I trade unusual option activities, so institutional order flow in the option market. I trade every day. 98% of my trading is option based. I also do trades for earnings, but that's about me.
Awesome. And folks, my name's Matthew Buckley. My call sign's Whiz. You guys can call me Whiz going forward. Flew the Hornet for about 15 years for the Navy. Taught myself how to trade equity options. So Andrew's a fellow wingman of mine in the options world. Popped up on the radar of one of the largest equity options vol arb firms in the world, headquartered up there in the CBOT, and had an absolute blast. Took the clamp it, so to speak, out of Chicago. No offense to anybody in Chicago. Well, especially after Jesse Smollett today, another subject. But took the Clampets down here to Fort Lauderdale and started Top Gun Options about, my God, 10 years ago. I think we're going on a full decade here. So really happy to be back hosting this. We have a lot of great symbols to cover. So we'll keep that batting order today, Larry and Andrew and then me. So let's kick it off with, and this is going to be good because this is obviously in the news of late. Larry, what do you think about Netflix, both short and long term?
Well, right here, it's really, you can see, if you see my charts, really kind of what we call really tight consolidation pattern. It wants to either break, usually this what we call a bull flag. So tendency is to break to the upside, but it's struggling here. It's trying to find its direction. But right here, I'd wait it out a little bit. I'm tending to look at this more to long side trade setup, but it's starting to stall a bit. So we want to watch this level right here. So, call it right about 250 and see if it holds right here. And then if this holds, you can see this consolidation phase. I think it's got potential to go back up there and retest that high, potentially go higher. But this is one, we call this kind of a volatility squeeze where it's really compressing So it's got potential for a very, very explosive move up, or it could be down. So, but I'd wait, but I think there's a tendency for this thing to potentially push higher. But I wouldn't do anything with it right here. I'd want to watch a little bit more to see if it can hold down in here. You know, maybe it comes back down to this 350, 55, 350 level, see if it holds, and then see where it goes from there. But potential more upside.
Okay, and it looks like earnings are estimated to be about April 16th, so company should be in a little bit of a quiet period. But Andrew, what do you see in a Netflix, especially? Do you have any take on with Apple announcing its massive, foray into streaming yesterday? What's your take?
Yeah, I mean, Netflix is one of those stocks that I always believe should go lower because they just spend so much on content. But it's actually interesting yesterday when Apple came out with the announcement. We did see Netflix moving higher on Apple's announcement. Apple was down 2%, Netflix was higher. And now we see Netflix down $6 today with the futures actually up 16. So I'm a big Ichimoku Cloud guy. You can see on Ichimoku Cloud, I totally agree with Larry. We're kind of in no man's land. I think next catalyst to move the stock at all will probably be earnings. And I'm looking at the April straddle. It's implying about a $38 move between now and earnings, which is about 10.5%. So, up a couple, down a couple, maybe we'll stay in a nice 10-point range until earnings, and then watch for a big move on earnings. Over the last 8 quarters, it's sold off 4 times, rallied 4 times. But until then, I think it's no man's land.
Well, that one's easy because I agree with both you guys. It really is kind of in this no man's land. As I said, earnings estimated to be on April 16th, so kind of in this quiet period. Great analysis, Andrew, about what happened yesterday with Apple's huge announcement. I mean, some of the star power they had at that event, it makes me wonder what stars are left to produce content for Netflix. So I kind of like the way you said that. It's one of these stocks that you always think should be going down, but you have to trade the stock you have, not the stock you want. So I stay away from Netflix, and I think content's we're over content, and we're starting to get saturated. So for me, I'm going to sit on my hands short term with Netflix, maybe see what earnings does. All right, let's switch over, Larry. Let's go with Micron.
So Micron here, you can see it's had a fantastic move up, with everything else in December. Beautiful move up, pulls back, slingshots back up again off earnings, but it's starting to fade again right now. So, it's stalling out a little bit here based on momentum. So I could easily see it pulling back right into kind of here. The next target would be right about here, $39. So this would be like the 50 simple moving average, and then here's your weekly prior week's low. So I think it's fading, it's pulling back, but I would not. I mean, if you short it here, there's not that much downside right here, and it's kind of no man's land, kind of stuck in between. So it's not a trade for me. I wouldn't short it, wouldn't buy it. So if it got down to this level here, which I don't see it getting down here anytime soon, and breaks 36, then more potential downside. So. But right in here, you got a lot of moving average accumulation and clusters and kind of a fairly decent support right there. So right now, just watch it, do nothing.
It's Andrew, when I look at the chart here of this, it looks like a buy on the rumor, sell on the news. What are you seeing with their last earnings? Yeah,
I mean, I would say it's okay. I am long calls in Marvell, ARVL. I have weekly calls in it. They've been buying a lot of calls in Marvell. The charts look very, very similar. Both of these down with the market higher. So it looked like it was going to break out to new highs. We saw institutional order flow of weekly 20.5s and April 20.5s. I made some money on those, and I'm down money on the weeklies. ON is another one. That's a semiconductor. We saw a huge institution of May 24th. So it might be an end of the quarter rotation. We do have end of the quarter on Friday. Maybe some people are taking some profits. If you look to see how these opened on January 1st, ON opened at $17, and now it's 22. So it might be a little rotation out of these names because they've performed so well this year, but I think they plug and chug higher. No position in Micron, but I am long Marvell calls.
Sounds good. I think both of you nailed it. Larry, I like the way you looked at the technicals there. I mean, as I said, kind of a buy on the rumor going in earnings here. Big, nice earnings numbers. And then everybody just said, okay, what have you done for me lately? So maybe it is what Andrew said, maybe an end of the quarter rotation here. But, looks like a lot of decent support around the 50-day moving average. I think you have to look at a Micron in the overall sense of technology too. Good article. What was it in Comedy Central today? Well, I call CNBC Comedy Central, that tech companies haven't been this negative about a quarter in 6 years. Now, I know Wall Street plays these games with the, hey, if you can't hit the ball over the net, lower the net. But it should be interesting. I'm starting to sit on my hands a little bit with tech because they have had a decent run ever since the Fed destroyed capitalism and then brought it back to us recently. So I'm probably going to sit on my hands with this one. All right, next one. Let's go with Baba. This should be good.
Yeah, so Alibaba, a lot of these stocks they're all very, very similar. The markets in general, the overall broad indexes, we had the big move, V bottom kind of move off of December. So you can see the December lows, everything just accelerated pretty much up. And now we're running into kind of stalling out a little bit with momentum. So, it too here is starting to break some of these key moving averages. So you can see, on the 25th there, Monday, it faded here and then picked back up a little bit, but it's stalling out a little bit here. So I would see right now, would not buy it here. And, potentially this is setting up for a little bit of a short term, possibly short. And I could see it kind of rolling over here and pulling back, just like I said, short term back, potentially back down to this 165, kind of a zone here, 170 right through here, 170 to 165. So kind of a really short-term potential for it to pull back into this area here.
Larry, you see any Baba get impacted at all by announcement of a trade deal, announcement of not a trade deal, anything like that, or do you think it's kind of immune to kind of any of that? It's its own world.
Well, I think a lot of this, the FXI, has been pushing up along, kind of anticipating some kind of trade deal, but now, a lot of these things are fading a little bit, so a lot of the news is already into it. So it'll be interesting to see when, if they do a trade deal, what the trade deal looks like for number one. But it should be supportive. But I could see, some of the money coming back out of these types of stocks. So,
okay, don't disagree, Andrew. What do you think about Baba? And do you think anything at the trade deal impacts something this big?
Obviously it's going to affect it. And Baba's a big e-commerce site in China. It's the Amazon basically of China. So. If you look at a chart here, once again, that just kind of looks like Micron, where it opened this year at 100. The open on the second was 134. So $40 this year. So that's about 30%. So maybe end of the year selling. End of the quarter selling. All these charts look very similar to me. I personally think the S&P could be stuck in a 2,700 to 2,900 range for the course of a very, very long time. So, if you try to buy, I'd rather be buying dips than selling rallies. But I just think we're stuck in the range. I think a lot of these charts are similar. Historically, November to April is very strong. And then, May through October is not as strong. So if we get some selling, I think it's going to have to be after April. Sorry.
After April, okay. Yeah, I'd agree with that analysis, guys. It really does feel like a lot of these stocks are trading the same here, and in a little bit of a holding pattern, waiting for some sort of announcement, as Andrew alluded to. We'll talk maybe S&P 500 towards the end here. This kind of quintuple top that we're looking at, and as Larry alluded to, is this trade deal already baked into this rally? And has the Fed gone full Scotty? I'm giving you all I got, Captain. I can't give you anymore. So it's really interesting that all this stuff's just kind of hanging, and it seems like we're waiting for something, and that something. It remains to be seen if it is going to be the trade deal. So, yeah, I'm going to hang at. I'm going to sit on my hands with Baba as well. Now let's go, Larry. Go to BPTH. I do not trade this, so I'm going to sit this one out. But do you trade this one at all, or what do you think?
Not at all. But so this is a biotech, I believe. So no, when you get this kind of these kind of spikes, it's off some kind of news, and then it totally fades. So this is, I believe, a biotech issue. No, I would not be involved with this one. And just looking at it from the technical side, right here, it's back down to, I don't even know how long this stock's been around, but back down to this 200-day moving average. So no, it's not one that I would be fooling with, period.
Andrew, you guys trade biotechs at all, or what do you think?
I'll trade anything with options in it. I just look, there's no options. So I was going to get implied move to figure out where the stock could go. I mean, it only trades 500,000 shares, so it doesn't really trade that much. Looking at the chart here, we obviously see a big gap. I don't know if this is Thinkorswim freaking out and a gap up to 73. Sometimes Thinkorswim does that on its chart. So I can just look at it simple and easy. The high for March 6th is 1460. I have no position on because I trade mostly options. I'd rather be long and short it. If I bought it here on $20, my stop would be under 1460, maybe a 14 stop or 1350 stop. I don't need to know what the news is. I think there's more upside than downside. Don't have a position, not looking to trade it, no options in it, but rather be long and short.
Yeah, me, I have a simple rule. I just don't trade biotechs. I mean, it's obviously if you do want to dabble, definitely don't buy the cow, do the options. As Andrew's saying, we just, at our firm up in Chicago, that was a red. You just weren't allowed to trade biotechs. Quick story. The main reason is, you guys remember Immunogen? I think I said that right. One of those, we had a guy, hey, Whiz, this thing, whatever drug it was, it passed phase 1, passed phase 2, and phase 3. Today is phase 4 results or whatever the hell it was. There's no way in hell, it's not going to pass. Never in the history. And breaking news, it failed phase 4, and this guy was out $4 million. So I just stay away from biotechs. It feels a little like dart thrown to me, because you can have those type of days where you don't want to be on the receiving end of breaking news and it's bad. But if you are going to trade a biotech, I'd listen to Andrew and probably stick with the options. Okay, now let's go to the Death Star, Google. What do you think about that, Larry?
Well, another one very similar. A lot of these are kind of similar patterns. You've had more of a choppy move up, but it moved up none the least. And you've got this big. It got so extended. I mean, if you just look at this, the weekly chart, you look at the moving averages, how far up price is away. So it's just kind of backing and filling, reversion to the mean. I mean, it's overall the trend looks still very strong, but I think this is due for a little bit more of a pullback. You can see right here, it's back to the weekly low. This is last week's low. So we get a pullback here. You're going to see good support right through here, 1146 down 1140. But right here, to me, it's kind of a wait and see, no man's land. See if it pulls back more. If it starts to consolidate here, 1180, then gauge it for move up. But right here, I would not be doing anything on it.
Andrew, what do you think about GOOG?
I mean, I wish this show was a little bit more exciting because all the charts look the same.
Yeah.
Huge run up from the beginning of the year. And a lot of these charts look very similar if you're trading technically. So beginning of the year, open at 1027. We're up $180. So up about 10% this year. I looked at earnings on April 29th. It's rallied 4 times, sold off 4 times on earnings. I think that's the next catalyst. What's going to make it move higher? If we get a China trade deal, everything will go higher. I think this is a buy the pullback. I wouldn't be looking to buy it for 1150. I do day trade Google a little bit, stock only. I don't think I've had a trade on probably for like 2 or 3 weeks. No position on now. I'll look to get long for earnings though.
Yeah, I'm going to go completely off the rails with Google here. Short term, I'm sitting on my hands, but I'd say medium term out to the next 3 to 6 months. GOOG's in a lot of trouble with the government. I've never, in 27 years of doing this, seen this. A week and a half ago, the chairman of the Joint Chiefs of Staff, General Dumsford, sat in front of the Senate. The dude's under oath, but as a Marine, he probably doesn't need to be under oath. He said Google is directly benefiting the Chinese military. And I got a lot of buddies still wearing the uniform up in a big building up somewhere north. And there is a absolutely massive contract that's getting ready to be awarded for kind of cloud, kind of the government cloud. Jeff Bezos of Amazon about 6 months ago sat on the stage at an Air Force symposium next to a 4-star general. He said, "We're an American company, America." And here comes Google, who recently backed out of a bunch of Pentagon contracts because the Pentagon apparently isn't aligned with their corporate values. So I take a more macro view, not just looking at the technicals with Google. I think they're going to lose this massive contract. I think it's going to go to Amazon, and I'd be I wouldn't trade. I wouldn't trade this one. I'd stick with Google. That's my opinion. For what it's worth. All right, let's go with what do we got next here? We have Roku. Speaking of content and everything like that, Larry, what do you think about Roku?
Well, again, another one that's had a fantastic run, and so right here you can just see this big explosive move here after earnings, and just really accelerated. And right now it's just kind of catching its breath and pulling back. So I see it, potentially pulling back a little bit more. I mean, it could hold right where it is here. This is a pretty key moving average, but you can see down here where these lows are right here, about 59.60. That'd be an area to watch. So, it's a kind of a buy on a pullback. So if you get it down into the 60 level and it starts to consolidate, that could be the point to buy, or it could pull back more to where it broke out from its earnings. So right here, I just kind of wait and watch, but on a pullback, it still looks like a nice trend.
Okay, another content play. Andrew, what do you think of Roku?
Yeah, I mean, like I said, it was interesting to see, Netflix and Roku both selling off the day after Apple made the announcement, not the day of Apple's announcement. It is a big mover on earnings. The earnings won't be till May 8th. I've seen movements here of 25%, 22, 21, and 54%. So right here, big move up. 75 is at the top there. We're getting a recent pullback. I think if it pulls back down to 60, it's worth a shot with a stop under 55. Like I said, I'm not a big stock trader, so I wouldn't be looking to do it. If I see unusual option activity in it, it's alongside, I will look to play it. Just kind of looking at some options really quickly to see how much they're implying the move can be. The 64 straddles about $7.50, and Roku moves $4 is this ATR. So it's a big mover. If you play options on it, I think it's a good stock to play options. I don't think I've had a position on since earnings. Rather be long and short, but no position on here.
Okay, I'm going to leave this one on. I don't trade a Roku. I like Andrew's analysis. Massive mover on earnings, as he said. Huge buy on the news, kept on going, pulled back a little bit to profit taking, and then really has taken off again. But another one where I'm most likely going to sit on my hands. But I'm saving my firepower for this one. Let's go with Larry. Go with Nike and everything that's going on with them right now. How do you feel?
Well, just another one that's had a great run. Now we got into earnings and it faded after earnings. Wasn't as great. The market was a little bit disappointed, but pulls back here. So I see it actually potentially could pull back a little bit more. You can see it came down yesterday and then rallied a little bit today, but kind of not with a whole lot of momentum to it. I like to follow momentum. The momentum right now is negative, so I could see this potentially pulling back. It's right into kind of this key moving average 50, but I could see it pulling back into 82. You can see all the tops there down to 80, and then, see how it holds in there. But I mean, longer term, it's been in a great uptrend, and but a shorter term intermediate, I think it can pull back some more.
Andrew, what do you think about Nike, especially considering what's happened in the past 24 hours with this stock?
Yeah, I mean, it looks pretty good. Like I said, I have the Ichimoku Cloud up here. It's a free plugin on Thinkorswim TradeStation. Broke Ichimoku Cloud to the upside on January 17th at 79. So you could have bought at 79, stop would have been about 73. You would have got the whole run up to the upside. Maybe it went too far too fast into earnings. Earnings was more the catalyst than that. The news about the AAUA or AAUU. Breakout yesterday above the cloud. You could have played it yesterday, bought it at 82. Stop would be under 76. I think Nike has another move higher. A lot of these stocks, I don't understand why they don't make so many acquisitions. They had a chance to buy GLUU, and GLUU looked like it was going to near death. Down, it was about $46, and now GLUU has tripled in value. Years ago, for a quarter of the price. GLUU was $47. Maybe consolidation with Under Armour as well, and Kevin Plank got in trouble for basically front running his stock and selling it before earnings. Now it got down $11. So I think a lot of these companies that are so big, such as Apple itself, should have been consolidating when the market and buying other companies when the market was cheaper, and they didn't. And I think they missed the ball. And now if they're going to want to buy companies, I mean, you could have got Netflix was $84, even if they paid 20% premium back when it was $84. They could have got all the content they wanted in the world for their streaming system. Now the stock's $360. So I think a lot of these companies long term missed the ball in buying other companies when the market was cheaper. But Nike, I think, goes higher. That was a long explanation.
Matt, are you there? You're muted.
Sorry about that, man. I've been talking to myself. Great conversation. It's been an interesting couple of days for Nike. Obviously, they reported earnings on Friday, warning of that slower global growth, kind of like earlier in the week, FedEx reporting slower global growth. Nike kind of confirmed it because they really are an international company. And then what happened yesterday, with what's his name? Not Jesse Smollett, the creepy porn lawyer guy trying to extort $20 million out of Nike. Here's what's interesting about that. So we currently have a kind of a tight iron condor on for a weekly trade with Nike. Where is it? It's because we sold a bear call spread yesterday. Let's take a look at this. So we're looking at the 81.5, 82 bull put spread, and then the 82.5, 83 bear call spread. So a really tight iron condor. I think taking a look at the allegations that this guy laid out, even if he was trying to extort money from him, I think Nike, as the week goes on here, has a huge PR fiasco on their hands. Long term, obviously bullish on the stock. It's Nike, it's its own Death Star, but short term, even though the dude got arrested for trying to extort money from Nike, I think Nike still has to refute the underlying allegations. So we have a really tight weekly iron condor going down range here on Nike. So short term, I'm neutral to bearish, and then long term, probably bullish there. Unfortunately, not a big Nike fan, but that's over a beer. And let's get to the all loved and hated Facebook. Larry, what do you think about Facebook?
Well, Facebook right here, you can see it's pulled back up quite a bit, and it's starting to consolidate. It looks like potentially can move higher from here. Let me just look again here. 1 second. Yeah, you've got this 165 levels. If it holds in here, you've got it's been really whippy, though. I mean, it's not one that I like to trade because look at the ranges of these bars. It's pretty whippy, but it's got good support right through here. You can see down to this 160 level. And here's kind of it gapped up. So it's been holding that gap low here. So it's just been holding, consolidating. It doesn't look too bad right here. I'm not buying it or selling it here, but this is one I need to see it consolidate a little bit more. But it has potential. You can see right here, this gap low right here, 160 it just keeps holding this gap low right here. So this has a little bit more potential, I think, to the upside.
Mm-hmm. Andrew, what are you thinking as far as Facebook?
Yeah, I mean, I would say it's stuck between 160 and 175 since beginning the end of January. So it had the gap higher on earnings, is up $16 on earnings. I mean, I guess you could short it if it gets close to 175. You could try to buy it, around 160 with the tight stop. I think it's right in the middle of the range, 160 to 175. Next catalyst will be earnings, which will be April 24th. I did look up, and the stock has rallied 5 of 8 quarters on earnings. It's up the last 4 out of the last 5 quarters on earnings too. Personally, I don't like it. I think what they're doing is despicable, and basically, I have a lot of friends in San Diego that run Facebook ad campaigns based on your profile, and it takes you like 6 hours to delete your Facebook profile. So I think long term they're in a lot of trouble, but that's nor here nor there. I don't trade on PEs or valuations. I trade on price action, price momentum. I'll probably look to put on a butterfly to the short side for earnings. Until then, I think it's stuck 160 to 175.
Yeah, I'm going to piggyback on what Andrew has to say, folks. I predicted this about a year and a half ago. As soon as the Cambridge Analytica scandal broke, it was over. It's over for these guys, as far as I'm concerned. And you got to really be careful around, Facebook earnings. I mean, everybody remember this earnings where, somebody should have gone to jail. The fact that they didn't pre-warn was just, it was phenomenal. I agree with Jeffrey Gunlock, who runs Double Line Capital. If there's one roach in the kitchen, there's a lot of them. And it is not a long-term company to be bullish on. Love or hate Donald Trump, the guy's got the power of the presidency and the Justice Department to come in with size 12 boots and break up companies like this. I we've been trading Facebook to the bearish side. I just don't know how you can be bullish on a company. Well, I don't know how you can be bullish on a company where the CEO a week and a half ago says they're going to change their entire business model to be more privacy focused, and then the next sentence says, "I don't know how we're going to make money doing that." Last time I checked, CEOs shouldn't talk like that. And if that is in fact the truth, you should figure out how to make money. So short term and long term, I'm bearish on Facebook. Can't stand the stock, can't stand Zuckerberg, can't stand any of it.
I agree with all that.
Harumph. All right, good. Then it's solved. Let's go with AMD then, Larry.
Yeah, looking at AMD, another one that's had a beautiful spike run to the upside, and now it's just kind of consolidating, pulling back some, absorbing the big move. But I could see it pulling back actually a little bit more. So we're back just this 382 retracement, but it could come back into this 2425, and that'd be the area to kind of really start looking at it. You've got some key moving averages down here to give it some more support. So right here, I'd just let it breathe a little bit, see if it's going to hold here first before jumping in. But it could pull back a little bit more. But overall, it's been a nice trend and still looks good longer term.
AMD is always a nice, solid, right down the fairway trade. Andrew, do you play in AMD at all?
Yeah, I mean, if you looked at charts of Marvell, ON, AMD, Micron, all semiconductors, they all look very, very similar. Possible recent highs. I mean, if you look here, it just made a recent high since October on the 21st, and that was an extremely bull bar, and it closed towards the high. It has pulled back 8%. I just think there's a rotation right now, end of the quarter, taking some money in the chip names and semiconductors. I think they will get bought again. It had probably breaking out 2507. If I was to get long in here, I don't have a position on. I would have my stop under probably 2507. So give it $1. But I think there's more upside. The only thing I think it can derail it, obviously, if China trade deal, more pressure for end of the quarter is the only thing I can think. The futures are up strong today. All the semiconductors were down, which kind of makes you shake your head.
Yeah, I think that's the canary in the coal mine, Andrew, is kind of the counterflow that these are doing. I think this is a China story too, the stealing of intellectual property, the forced transfer of technology. So I think AMD's due for a little bit of a sideways move. Nice solid move here. I'd probably sell, maybe bear call spread up to the upper end of that Keltner channel. But another one of these where I'd most likely be sitting on my hands. And as Andrew said, folks, we're in a little bit kind of in this holding pattern here on the S&P 500. Like I said earlier, kind of this quintuple top here where, there's the Fed saying, oh my God, we're going to raise rates. Here's the Fed saying, oh my God, don't listen to what we said. And now we're kind of waiting for this next catalyst. So it probably, in my opinion, is going to be a binary move. It's either going to be up or down. I know that sounds like rocket surgery, but it's kind of the truth because markets don't chop around sideways forever. So I'd probably sit on my hands for a little bit with AMD. All right, now let's get to one of these weapons of mass destruction here, the FAS, one of these triple reverse inverted with a half twist there, the financial bull 3 times. Larry, what do you think about the FAS?
The FAS. Well, right here, you're kind of right here on this kind of, I call it kind of a cliffhanger. So I'd be watching this thing to make sure it can hold right through here, this 57. Financials have obviously taken a beating since the Fed meeting last week. So I don't see the momentum catalyst quite yet to propel this much higher. So I would not be doing anything with it here. I'd just be watching. I mean, a lot of these things, you've had this beautiful, huge run up, pull back here. You've got the 200-day moving average. It failed, broke back through it. So I'd see if it gets back up here to this 260 at 62. If it fails there and pulls back, rolls back over, this could be a short for a bigger move down. But it's trying to consolidate, hold in here. But it's not one I'd be playing right here.
Andrew, do you play this one at all? These reverse, triple inverse ×3, especially with the financials?
I cannot prove this on record, but every triple bull and bear ETF is highly manipulated to the closing print every single day. As I said, I cannot prove it, but I don't touch any of these. I think they're basically all scams because they're just core. Like if you watch, like some days when you know, you can look at call options, and then a lot of times like the market will move up a little bit, but the calls don't move at all. I don't trade them. I don't touch them. If I want to be long banks, just buy the XLF or buy the KRE. That's a regional banking ETF. I don't deal with these triples and these triple shorts and longs. I think they're highly manipulated at closing price. So I pass on these.
Agree with everything you just said, and you read my mind, Andrew, because this is exactly what I had up was the KRE. And the regional banks, folks, your blue blood banks, folks, your JP Morgan, your Morgan Stanley, your Goldman Sachs, they ain't going out of business anytime soon. And they have trading divisions, right? It's called FIC. Fixed income, currency, and commodities. So they can trade their asses off. The regional banks are going to get absolutely obliterated by Jerome Powell and this Fed. I mean, hell, even what's her name? The former skipper here, Janet Yellen. Where was she? She's in Hong Kong, wherever she is. Former Fed Chair Yellen says bond market should be hinting need for a cut. I mean, with the Federal Reserve, folks, has gone from stepping on the brakes and raising interest rates to Janet Yellen, who used to be the skipper, saying we need a rate cut. So I'm with Andrew. The reverse, triple, inverse with a Q-tip on top, I'd stay away from and just go, because remember, most of those things are what? They're a derivative of something, right? So go trade the derivative. Why?
If you want to trade them, go through the whole prospectus first, then see if you still want to trade them.
That's why I led with they're kind of weapons of mass destruction. The FAS and then its sister or brother, the FAS, right? The other one in the other direction. I agree with Andrew, folks. I think these things are highly manipulated and they're run by, not to say that, you know, the big name banks ain't cheating either. I remember, who was it? Oh, Barclays. Remember the dudes at Barclays that were playing with LIBOR. So, you know, things can be played with. It seems like these things are played with a little bit more. If you want to short the banks, especially the regionals, I mean, this just ain't, that is not a good looking chart out of the KRE. I'd probably do that, but stay away from that, the third rail, things like the FAS. All right, Larry, I have no idea what the next one is. What's GLUU?
Dude, it's a gaming stock. It's the Kardashians got to deal with them. GLUU Mobile.
Oh my God, I should know this.
You probably know a lot about the Kardashians, I feel like.
I do. I got it taped. I'm gonna grab my Chardonnay and my blanket and my cat in about an hour and watch the next session here.
Yeah.
Larry, what do you think about GLUU?
Well, I don't chase these kind of moves like this. I mean, it's had a fantastic spike up off of, I guess, the Kardashians or whatever. But, you know, I mean, I guess it could keep going, but technically it's just too extended for me. I'd wait. If I'm looking at this as wanting to trade it, I'm going to wait for a pullback. If it keeps going up, then I'll just let it keep going up, but it's not one I would chase.
So, Andrew, it sounds like you're way familiar with this, so lay it on me.
No, I knew the Kardashians had like the most downloads in history, and then like GLUU went up from like, and it broke the $5 mark like a long time ago. Yeah, it used to be like, it used to broke up to $5. I haven't seen it in a while. It's now $12. I'm looking at them right now. They're based in San Francisco. They have titles such as Blood and Glory, Contract Killer, Deer Hunter. So it's a mobile device which has games on it, which is pretty hot nowadays. So the way that the chart looks, I think it's a buy and any pullback, and maybe they will get bought at some point. I'm just throwing it out there. If I look at the statistics, I just want to see what's it worth, a couple billion. Market cap 1.6 billion. So this could be something to be taken out. I don't have a position on unless there's massive unusual option activity. I won't be looking to buy anything in it. I think you can buy a pullback to about 10.20. Top would be under $8. I mean, this chart looks great. It looks like it's going higher. It did pull off 3% from the highs today. Let me just see the volume today. But I'd rather be long it. Don't have a position on. But I think it goes higher.
Andrew, what's your? I think the take out of everything you said, the takeover thing is the best. You got $10, $11 stock, whatever it is, and it's just as you were alluding to with Apple and all these other guys that were just simply or still are just so flush with cash, and they're not doing anything with it. What's a good options tactic? I don't know when these guys are going to get bought, but they might be, and it might be in the future. What would you do? Do you just go out in time?
Yeah.
Or what
so
would
I
you
look
do?
at, I like to do butterflies. So just kind of throwing it up here. Let me just look at one thing. I'm looking at the 2020. So the 2020, the 10, 15, 20 butterfly. you buy the 10, sell 2 of the 15s, you buy the 20s. Looks like about $1.20. So you're risking $1.20 to potentially turn that into $5 if they get bought at 15, which would be a 40% premium. And right now it's $1.20 in the money. So this is a good way to play it. I like butterflies on measured move targets. The 10 straddle is about $5. So, I mean, that's a good play, I think. The 10, 15, 20 butterfly in January, risking $1.20 could be worth $5. So you'd make over 300% return if it closes at 15. And right now there's no time decay because it's $1.20 in the money.
Not a good, not a bad way to play it. Remember, folks, that any of these type of, I mean, for years I've heard that Apple's going to buy Twitter type of stuff, never's come about. So, you know, if you are going to do something like that, just kind of look at it as what it is, which is, hey man, it's, I think this is going to happen, and you know, this might be money that might not happen, but going that far in the future isn't such a bad idea. So I like that. Okay, good. Zoetis, another biotech that I'm going to pass on, Larry. Good run after earnings. Doesn't look like it's really given much of that earnings up. What do you think about Zoetis?
Yeah, I mean, Zoetis, again, I don't like the biotechs either. But you know, it's cleared a lot of resistance here. You've got, you know, it's cleared these prior highs, so it looks, you know, it looks pretty decent. So you can see here just from the weekly, I mean, just looking technically, if I don't, you know, really know what this is, if it's biotech or whatever, but it looks, you know, right here, you've got some good support. So if it pulls back into this area here from these prior highs where it broke, you know, this would be an area to where you'd look to get back into it if it can show a little bit of consolidation. You know, down around here, this 94, 95, this zone in here, if it pulls back, this would be an area to start watching it again for a buy. I mean, technically it's still looks pretty okay.
Andrew, another biotech, man. What do you think?
I'm going to say the name of the company is Zoetis, not Zoetis. So Zoetis, and I'm pretty sure about this one. And I think Bill Ackman has a pretty big position. I know there's an activist involved in this. They actually just presented at a healthcare conference. We actually saw institutional order flow of the April 95s being bought right before that announcement. And you can see that the open interest here was 2,000. Those went from $1.30. I didn't get into those to $4.50. So whoever trades Zoetis, they knew what they were doing because they were buying these for, and I can see if I can pull it up on my scanner. They were buying these about 2 weeks ago for $1.30, and then they ripped to over $4.50. So the stock is a buy in any pullback. I think it takes out the 100. There did some study in history that said, I don't know what the percentage, but stocks that hit 80 go to 120. I don't know. I've never ran a historical data set on it or back testing, but I think it takes out the 100 and goes higher. I don't know much about the companies because I think it's called Zoetis, and I think Ackman has a big position. But I'll be looking for call activity in this one because it worked the first time, so it'll probably work again.
Well, as soon as you said Ackman, I'm ready to take the other side of that trade. But I appreciate the spelling. Again, a biotech. I can find alpha better in other places than throwing darts. But all right, let's get to the. Let's talk Bank of America because, like we just talked about with the Fed and rate decisions, Bank of America just got obliterated recently. So, Larry, what do you think about Bank of America and just all that overall Wall Street blue blood sector?
Well, here's broken pretty bad. So you've got this big gap area down here. It did fill the gap, so that's positive. With the financials right now, everything's pretty negative. You know, for me, I would just be avoiding them for right now. I'm not seeing a good catalyst for an upside move here. You know, everything's kind of broken, so I'd be waiting out the storm. You know, we were looking at Citi, we had a calendar diagonal and had to do some big adjustments on that when that Fed meeting came out. So I'm not really too keen on the financials right now. So you can see on the weekly here, you know, it's broken down pretty bad below all these key moving averages. So what I'd be looking at, you've got earnings coming up here in mid-April. So it'll probably just kind of churn sideways, maybe creep up into earnings, possibly pull back. I don't know. But right into here, if it fails into these moving averages right here, about 2,800, this would be a kind of a place to look at it re-short for a move lower.
Andrew, what do you think? Not just about Bank of America, but that whole Wall Street blue blood sector.
I think anybody that's ever worked at Goldman Sachs is a crook. They were my clearing firm for 4 years, so I probably shouldn't say that. I don't understand the bank's business model. I don't understand how they make money. We have rates at historical low levels. Most of the trading desks are shut down. They don't make money like they used to anymore. So I just don't understand how these banks make money. So looking at a chart here, if I wanted to play it to the long side, stops under 26. It's pretty evident. You see the Ichimoku cloud is very thick cloud. I think it's worth a go on today's close with a stop at like 25.50. So maybe risking $1.70 to make $1.70, thinking get back to the highs of 30. It's not one of those names I play because it doesn't really move that much. Standard deviation ATR is 27 cents. It's like watching paint dry. And how much stock it trades in a day? It traded 60 million shares in a day. So it's not like one of those stocks I really play. Even if there's unusual option activity in it, like a 10,000 lot controls a million shares of stock. It trades 60 million a day. So it's not like in my trading plan or repertoire. I think it's okay to long side with a stop under 25.50.
Hey, Matt, are you there?
Damn mute button keeps sitting on it. Bank of America. Agree with Andrew and Larry. It's not that I'd stay away. I mean, I'd play him to the bearish side here. It's really been kind of Fredo money. You're dead to me, Michael or Fredo. So, 1 year performance is down, 5-10%. So these are dead money, as Andrew said. They're trading divisions. First of all, in the Q4 of last year, they couldn't trade their way out of a paper bag. From J.P. Morgan, Bank of America, all these guys reported just trading in the fourth quarter that was absolutely awful. So they weren't making money there. They're not making money in the investment banking business. So, Bank of America, little old lady on the street corner, that's going to be the way you're making money. Bearish on Bank of America, bearish on all these banks, and you can thank the Fed. That's who you can thank for that. We already covered AMD and we already covered Nike. So those are, looks like 2 repeats. So about 13 minutes left. You know what I want to do, fellas? Let me get your take on this this V recovery here, Larry, this rally, and what the next catalyst you're seeing as far as the overall market and how you're playing it.
Well, we just look at swing trades. So, a trade that could last 1 to 2 weeks or something like that. So it's basically looking at momentum and different chart patterns for potential breakouts up or down. So when I look at the S&P, the key levels that I'm looking at for the S&P is going to be that SPX, whatever you want to call it, 2,800. So that's going to be, to me, kind of the level to play off of right here. This on SPY, we'll put up SPX, but 2,800 is kind of the level. And so I want to see, if it breaks, want to see it break with some kind of momentum on it on a closing basis. But when we look at the SPX on a weekly, this 2,700 is the big support, and then I'll pull up the daily. But 2,800 is kind of what I'm keying off of there. We've had a little bit of a push back up on the Russell, so that's been really diverging bad. So that one's been kind of holding the markets back a little bit. But the key level will be, right where we are, right in here. You can see this highs that we had up here at 2860. Then we've got this. Hold on a second. Sorry. And so looking at these as the key levels of support. So right through here, 2785 starts breaking this level here. Look to get short down to this 200-day. But you've got good support down in this area all the way down to 2713. So, it could pull back, but it's trying to hold. So far, so good. So I'm going either way, looking for longs and shorts in the market, in stock specific. So if something's starting to roll over with momentum to the downside, like Grub, that's one we've been short a couple of weeks. Want to go short. If something's looking to push to the upside, like we're looking at Adobe now, J&J, but Grub. I mean, things like this. Want to be short that. Want to be long some of these others that have momentum to the upside. So it doesn't really matter as much the broad markets, that will be a kind of actually a tailwind. But right now the broad markets are trying to hold in there. So, we're looking at Adobe. So that's kind of my take. So
that's awesome. I mean, it doesn't matter which way something's going. You just need it to be going in in a direction. So
yeah, but in this market, I'd like to have longs and some shorts because, the markets are kind of rotating back and forth, and we've got that money rotation going on, and still the trade war, no outcome to that, just back and forth on that. So I'd like to have some longs and shorts in this market.
I like it. Andrew, what do you think in macroeconomically? Let's just say for the next 30 days, what's kind of your strategic mindset and what's in your crystal ball?
Well, this is another reason I don't like to watch TV, because I saw Jeffrey Gundlach, which I think you mentioned him earlier, talking about we were in a bear market. So I spent the first 6 weeks of the year basically trying to short every rally, and that did not work. Then I spent about 2 weeks getting about half to 2/3 of my money back being long the market. So in the historical sense of the stock market, it is almost nearly impossible to be short unless it's 2007, 2008. And you have to be so perfect on your timing because the market always goes higher. So I am playing to the long side. I don't think I have any short positions on right now. I trade options. So, if I buy options for 30 cents, 40 cents, they go to zero. I know what I can lose. I'm not sitting here saying I'm selling puts naked or selling put spreads naked, but I am long the market. I continue to be long the market. Catalyst this week is end of the quarter. I think we'll get a run up into that. Today was interesting because the futures were up, I think, as much as like 25 or 30. They sold off and they're like only up a point, and then they rallied them at the end of the day. So I could see us being in a range from 27 to 2,900 for a very long period of time. If we get a deal with China, I don't care. I don't think it matters what the deal is. I think we rally hard, and that might be a short-term top. Market's strong this year. 13 of the last 14 pre-election year, because next year we have elections, so this is a pre-election year, we've been higher. So with that said, I'm going to stay long this market. I think it's too hard to play to the short side.
I like that. So, folks, we in our live trade brief today, we talked about I called it a burner trade. We took a look at a bull put spread on FXI, which is the iShares China ETF, to finance the purchase of some upside calls. Steve Mnuchin, Larry Kudlow, the heads of the 5 families, all those dudes were on an airplane. I think they're over in China right now. They're trying to get a trade deal, something announced in April. So they can have a signing ceremony down here in June, down up the street here in Mar-a-Lago. My take on that is, and what's the name? The guy from Wharton that was on CNBC today. I think that we're going to see an initial
Jeffrey Siegel?
Yeah, that's it. Jeffrey Siegel, Jeremy Siegel. Yeah, good, smart guy, 500-pound brain. It was good to hear kind of what I've been thinking is I think we get a pop on the announcement that no kid people walk out to a microphone and say, hey, we got a trade deal. And then I think we're going to drop. I think the trade deal is going to be worth the paper it's written on. I think the market's going to figure that out. The Chinese are not going to stop stealing our intellectual property. They're not going to stop subsidizing Chinese companies. I think they're just going to sign something to get out of the way, and I think the market feels that. So we're short-term bullish on FXI, and then we're gonna pull a Larry there. And soon as I just feel that the market's going to sell on the news with a trade deal here, and then we're not out of the woods yet with the trade stuff, because Trump's already said once I put China to bed, I'm going to shift over to Europe and go after those guys for their trade as well. So it's going to be an interesting next couple months to see what goes on in the market. So, all right, fellas, I'll tell you what, Larry, why don't you let us know where we can get a hold of you and check out what you do.
Well, again, thank you very much. It was a lot of fun. Let me pull up my site, and I'll show you where you can go to find us and check what we're all about, if it will come up. Here we go. So, yeah, come visit us at powercycletrading.com, and we'll always have something. Usually every week I've got some kind of webinar or something going on, so you can just come up here, click upcoming live events or webinars, and you can sign up for what we have going on. Got one coming up this Saturday. Got a lot of great content on the site, a lot of great articles, a lot of good free ebooks for you, a lot of trading software I've developed and courses, just all kinds of option trading courses. So just a immense amount of good educational material. So come check us out at powercycletrading.com.
Awesome, Larry. Good working with you. And then Andrew, how do we track you down, man, at AlphaShark?
Yeah, at AlphaShark. So I pulled up the website, alphashark.com. We run one of the biggest all-day audio visual trading rooms in the world. So we have 4 moderators throughout the course of the day. I will be completely honest, trading is not like it used to be. It's a little bit slower. I have a lot of time to kind of watch the walls dry. But it does. I'm in for the first hour of the day, a lot of action in the first hour. So you can go to alphashark.com. Same thing with Larry. You know, I do a lot of webinars. We have over 30 products, so a lot of good educational courses on there, on demand and DVD. And that's about it.
Awesome, folks. Real easy to track me down. We actually opened up our squadron for the rest of the week. All you need to do is head to go.topgunoptions.com/FT. That stands for full throttle. We're taking a look at, like I said, China trades this week, taking a look at tactical trades on Nike, and we've been trading Brazil a lot. The Trump of the tropics, Bolsonaro. We've been in the EWZ, which is the Brazilian ETF, for a while, and really doing a nice job there. So all you need to do is head to go.topgunoptions.com/FT. Stands for full throttle. You can join us for free for the rest of the week. So, all right, guys, good working with you again. Larry and Andrew, it's always fun. We had a good session today. David, I'm going to throw it back over to you, and thanks for having me to host.
All right, thanks, guys. Lots of good information for everyone today. Just a quick reminder for everyone watching, be sure to subscribe to Timing Research on YouTube and your favorite podcast network. You can also go to TimingResearch.com to get access to this or any of the past show archives and notes. And be sure to join us for both shows next week. Crowd Forecast News on April 1st, Monday at 1 p.m. Eastern Time. And then Analyze Your Trade. The next episode of this show will be on 4 o'clock, or at 4 o'clock on Tuesday next week. Matt will be back to moderate that one as well. And some of the other people I have on the schedule for next week are Simon Klein, Mark Sachs, Jim Kenny, Jeremy Newsom, and Brian Clindworth will be on for the first time, who works with Andrew. So should be some good shows next week. And just want to thank my guests again for today. Larry Gaines of PowerCycleTrading.com, Andrew Keene of AlphaShark.com, and Matt Buckley of Top Gun Options. Thanks, guys.
Thanks, guys.
Thank you.
Ciao, everybody.